Yo guys, what's up? How you all doing? This is Demi Rose FX here, and welcome to the Fox for It podcast. And so, right today, I'll be teaching you guys how to understand the trap zones in the market. Right. So the trap zones, there are several type of trap zones the market present to us. So you need to understand those trap, right? So you don't fall for the trap of the market. So there are several type of trap zones which I'm going to be explaining shortly to you guys. And the traps are more majorly they are more or less like the liquidity in the market. And there's this saying, if you don't see the liquidity in the market, then you are the liquidity. All right, guys. So without further ado, let me take you on chart and explain how the trap zone works. A quick one. I'll be explaining to you guys traps and the psychology behind the traps and the reasoning behind each trap so you guys can understand it, right? So first of all, the most popular strategy, like I already explained the previous on the previous video I did. If you guys haven't watched it, you guys should go and watch it. The strategies, the four popular strategies that I mentioned, the trend line, breakout trader, support and resistance, smart money strategy, and all those things, you guys need to understand those strategies because of the traps, actually, which I'll be explaining in detail today. All right. So, like I said, the first strategy, like what you notice, like the basic smart money strategy. We all know smart money is you want to see stop points like this high was taken out, right? And then break of this structure here, right? Then retest to the holder block, right? So this is what we're expecting, retest to this holder block, and you want the market to push up and go down. So this is the basic smart money, right? So the market retest to this order block here. So this should be your entry, you know, but this should be your entry here, right? So this is the basic smart money strategy that everyone knows, like everyone knows. So now there are some things you also need to put in place. You need to understand the market doesn't always do this, right? This is not the market. The market doesn't always do this, right? Sometimes the market retraces back to the 50% or to a breaker or 50% level, then break this low. So there's a reason they're doing this, right? So this alone brings in a lot of traders into the market. Why did I say so? Now this is the reason why. If a trend line guy see this, right, what will a trend line guy do? They'll see this high, like I said, you break this low. You see this second high, you break this low. So they'll connect these two highs together, right? What did I say? They'll always want to allow price retrace, they thought touch and they sell, right? So that's how they're being taught. Then supply and demand guys, the same thing. But what would they put their stop? Their stop will be here for the trend line guys, right? For the supply and demand guys too. Once market breaks this low, right? They allow the price to retrace into a supply zone. This is where they're going to short from. The same thing. Their stop is also here too, and they want to put their TP just below this, right? So even smart money traders, they're the one that usually trade order block, tiny order blocks like that. So they'll wait for the market to retrace to the order block zones, right? So they'll wait for the market to retrace to the order block zone, and they want to short there because they like using tight stop loss, even wait for confirmation around the zone, and they want to short here, right? So all this, where is their stop loss residing at? Their stop loss, all their stop loss is residing at these areas here, right? So there are a lot of stop loss above this week here. So you need to understand. And I told you, if you're not the liquid, if you can't find the liquidity, then you are the liquidity. So you need to know where the liquidity is, which is the stop losses. So many stop losses is resting below here, right? So what would the market do? The market definitely will definitely want to take out the stop losses of all these traders. The market will, that's what the market is going to definitely do. So this is a trap zone. each time you see this, you don't I define this as a trap zone, and this is a trap zone here. So when you see this high, you know this is a trap zone. You just have to just be patient for your setup to form, and that's it. Trading is all about being patient for your setup. And this order block is a valid one because there is a liquidity resting below it. So this is a valid OB. You might probably see an OB here, but it's going to be a fake OB. This you could probably see OB here, but most times it's a fake OB. It's a fake OB. It's not the real one because there's a lot of stop loss resting above this OB. That classified as a trap zone. So sometimes the market might give reaction, then smoke up into this, forming another trend line or whatever, or equalize here. The smoke up, then finally smoke down. And there's another thing here again. Like once the market break this zone here, buy stop breakout traders are buying this thing, right? Because it breaks this high, their stop loss will be here, right? Like I explained this on the I explained this before. So you guys, if you haven't watched the first video, go and watch that. How breakout trader trades. So their breakout trader put their buy stop here, their sell, their stop loss is resting here, right? So even the those who trade structure, right, they will see this as a high. This is a high and this is a low here, right? So they'll see this as a break of market structure. They won't see this as a trap or whatever. They'll see this as break market structure, and they'll see this as breaking market structure or BMS, whichever they want to call it, and they'll want to buy here at this demand zone, right? Demand zone. Or you could probably see an order smart money. If they see an order block there, smart money guys too also want to buy there too as well. So now the liquidity has been transferred from buy side to sell side. So all this is a trap zone for those selling, took them out, and now where is their stop loss? Their stop loss have shifted from this to this. So the whole world are gonna be buying this shit. They're gonna be buying this thing. So we, the non-traders, once you see this, you need to think like the the market maker themselves. Price might definitely react from these levels here, giving it like okay, a trend line, giving them this building up this trend line or whatever, bringing in more buyers into the market, and definitely price surely smoke them out and take out this stop here because they bring in trendline traders, all the trendline traders in the world, they'll be buying this thing. The demand traders in the world, they'll be buying this thing. Smart money guys will be buying this thing, and this is how the market is booked. This is how the market works. You transfer money from the buy side to the sell side. And you need to understand these things. I'll be going on chart soon. I'll be showing you how this thing works. So this is the first case scenario and understanding the trap zones, right? So this is the first case scenario where you see this stuff like this, right? So you can call this one majorly the supply and demand or breakout trap zone, right? And sometimes the trap zone comes in another form of this kind of situation, right? So you want to see the market do a stop on to break off structure, right? If we trace up into this, but it didn't really mitigate the other block, then start forming a trend line. You can also see this too. So this is majorly the trend line trap zone. So all these are the trend lines. So you just need to just relax and wait for the market to take out the old trend line and mark out the trap zone. So here is a valid trap zone. So once you've identified your trap zone, the next thing is to identify your order block trap zone, more or less like a trend line trap zone. So it's a trend line trap zone, but we call it a TL trap zone. But then we have a valid order block above. So I know this order block is valid because we have a trend line trap zone, because we have one break of this structure, market break this structure, then went up, then break this break of structure two, and we have a trap zone. So you just have to just wait for your the price to retrace back up. A lot of people are selling this shit, right? Wait for them to get smoked out. Once they are smoked out, then tap into the valid order block for sure. Sell here. This is the valid order block, right? Then market will trace, then smoke down. And what happened when they do this, right? This is what happened. They bring in the induced buyers into the market in form of break of structure. People see this as a break of structure. Supply and demand, guys, the same thing. They won't be buying here, right? And the market usually give reaction. They usually give reaction. They won't just smoke them out. They will always give small reaction then before they break them out. So this is how the market move. It transfer money from these sellers, trendline sellers, stop them out, induce buyers in form of supply and demand, and in this case, a demand, right? And sometimes you could even see like an order block in these zones. It also induce smart money buyers too as well. Then the market retrace up, then smoke them out. So you need to understand this. That's why I said you need to understand this the way they trade, but we don't trade it. This is how we trade. We understand trendline traders, we understand smart money traders, we understand their strategies, we understand breakout strategies, but we don't trade it, right? Because we know 99% of traders lose money. And why? Because they are trading these strategies. So we do the opposite instead, right? So this case two of the trap zone, and finally, I'll give you guys the case three of the trap zone, right? So this is the case two, and finally, you need to understand the case three of the trap zones. So case three is here, right? Sometimes you see this stop, you see this break one, right? Then the market comes here, forms like an equal highs, like a double top or a triple top, whichever, and finally give the ghost and do a break of structure too, right? So this right here is the trap zone. So this is the case three trap zone, right? So this right here is a trap zone. Why is it a trap zone? Because breakout traders, once the market trades above here, breakout traders are putting their buy stop here and their stop losses here, thinking the market will go up, 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 and up. But that's not what they're gonna do. And secondly, supply and demand guys, especially supply zone, they are seeing this as a supply area here, and they want the market to retrace back up here to sell, look for a continuation to the sell side. But their stop, where is their stop? Resting here, right? Thirdly, those smart money guys, if they see maybe a tiny order block here or whatever, they also want to alert price to retrace there, then they sell. So stop loss, where is your stop loss? Your stop loss is resting above here. So that's why this place is a huge trap zone. And those that trade double top, this is it here. Their stop loss is resting here because they think this is a huge resistance level. So the market will definitely want to smoke their stop loss out, tap into the valid order block here, then break down, then smoke these people that are buying here. So this is the three case study you guys need to understand before we go on chart. And right away, I'll take you on chart right now. So how these things played out and now you need to understand it. Okay. So uh all right, so let's go. So I hope you guys understand those case studies. Let me just give you those case one and case two and case three again. So case one of the trap zone, you want to see price go okay, let's hold on a bit. I have to call this thing. I'll go cut down
Yeah.
until it's
Why is the string connecting? Just connecting.
MIT, right?
Yeah.
You know, it's always
H A
disconnect.
H A
H A
H A abi?
hmm,
U W
U W
J O S J
J
O
O
S
S
M
M
W B.
W B. Let's see. Oh, I got it right. Okay. Hmm. Okay. Control drag delete. So this a brief recap. So you guys need to get this a brief recap. Case one, understanding the trap zones. You want to see market take out the previous high here, right? Take this high out in break of structure, right? Then retrace up and break another structure, right? So market took this previous high, break structure, retrace up, then break another structure. All right, break this structure, right? So we know here is a trap zone, right? Then this order block here is a valid order block. So you want to see price come to these zones, then smoke down and stop out those people that are buying here. All right, stop them out. So that's what you want to see, right? So I'm gonna go on short here. All right, so this is case one. All right, stop all those that's buying here. So the case two, like I said, it's price did a stop on break structure here, then we trace up, all right, then break, no, then you trace up, then did a trend line, forming a trend line, finally then break, right? So then we have a valid order block here, market break this zone, so this is the break two. So we know we have a trend line here. So this is a trend line trap zone. So you want the trend line trap zone to be taken out, right? So you just have to just wait for it. Then this is where you want to short after the trend line trap zone is taken out. So you wait for price come up there, then smoke those people that are buying here. Smoke those that are buying here, smoke them out. So that's case two trap zone. And finally case three, um, which is this one. You want to see the market do a stop on, break, right? Form a triple top or a double top, whichever one, right? Then break again with momentum, right? Then you just stop here, you break here, and another break, right? So we know these areas are the trap zone, and we have a valid order block here. So you want to see price, you trace back up, smoke, probably give you a reaction, smoke them out, tap into the valid order block, and that's where you go on your short. You take out those that are buying here, right? So that's a three case study. And for the buy side, reverse is the case. Just just do the opposite. It's vice versa for the buy side. And I know I'm doing the sell side, but It's the same concept, just reverse it, right? Just reverse it. So this is case one, case two, and case three on the trap zones. So let's go on chart and quickly take you what happened today on price action, right? So let's go. So just looking at this chart on the 15 minute, right? So what can we see, right? What can we see? Definitely, this was yesterday's. Yesterday's trade we took, which I will explain to you now. So just looking at this yesterday's, yeah, there's this lot of sell side liquidity here, right? The market built sell side liquidity here, equal lows, equal lows, equal lows, and a little bit of trend line. So all this trend, touching trend line. So all these are build up of liquidity orders right here, right? Definitely, the market will definitely take them out. So the market took these guys out from another equal lows, took the trend line guys out from equal lows here, right? Went up, then finally took the equal lows out, the equal lows out. And looking above, you can see this one touch, two touch. We know these are buy side liquidity here. So once the market takes out this equal lows here, the market should retrace, and this is the next liquidity draw on liquidity, this equal highs here. And on the bigger picture, this is more or less like the reason why the market smoke up high because it's more or less like a bigger picture trend line, right? If you look at it, it's a bigger picture trend line. You know, one touch, two touch, three touch, it's reacted from there, then smoke them up. But I'll explain to you in details what happened. So now that the market took out this sell side liquidity, what are you expecting? You expect the market to retrace up, right? So then you wait for your confirmation. I think Mena explained this on the video that was just dropped. So if you haven't watched that, you should also watch that too. So you have a break of structure here after the liquidity has been taken out. Then you have this stop. So definitely this should be your entry. And we smoke up, right? So that was the trade we took. Mena took and explain it to you. Um, so if you haven't watched that video, I guess you guys should watch the video. Then today price action, which I'll be explaining to you in details right now. So for sure, this is what when I wake up in the morning, I saw this, right. This was what I saw in the morning. I already marked this zone out. Why did I mark there? The same concept. You have this stop here, right? The market did a stop here. The stop once here. The market did a break of structure here, right? Did a stop, break of structure, went down, we went up to this week. So we have to this week here, right? So I know then smoke down and form another, it broke this break of structure too here. So I know this should be a trap zone, and this other block right here is a valid order block. For sure we have reaction from it. Why? Because we have a trap zone, which I just explained for you guys. And if you explained for you guys just a couple of minutes ago. Where is it at? I can't find it. So I did explain. uh, Let me check for it. All right, so this is one. It's case one, right? We have the stop, break one, right, and break two. So we have this week here, and this should be a valid order block where we have reaction from. This is the case one, all right. So you need to understand this thing. It happens on all time frames. Once you see it on, it happens on all time frames. But on the higher time frame, yeah, because it also happens on higher time frame too. So you need to know what you're doing. So we have this, right? That's why I marked the year out, and I mark the out, then we're just anticipating. So then London section start, right? London section start. This was Asia. Asia start for me by 10 to 6 p.m., 6 a.m. rather. So 10 my time to 6, yep, So this was Asia for me. This was the Asia high and the Asia lows. Right. So Asia highs and Asia lows is also a powerful liquidity and liquidity guide. It's going to tell you what they are planning. So this was Asia for me. So what can I see during Asia? What did I see during Asia? I saw let me just take this out. Okay, let me take this out. This is like blaspheming, but yep. So I saw the market took out Asia low, then took out this low, right? Tap into this fair value gap zones here, right? And most of all, liquidity build up, right? These are all liquidity build up for me. One touch, two touch, three touch, like one touch, two touch, three touch. I know they are building sell side liquidity, buy side liquidity, or a trend line liquidity rather. You call it a trend line liquidity. So this liquidity, I know it's a build up for those people selling this. We also have this build up of traders here. So once the market took out this liquidity, right, we had a break of structure here. Then this is our London trade. So during London by 8 o'clock my time, that's London. We know we have a trade there. But yeah, so you know you have a trade there, and that's what you should have done. So same concept again. Market took this break of structure right here. Let me delete this. So we have this huge trend line, liquidity build up. Market break structure on the M5 here. All right. Then look at this. We also have a lovely trend line here, a trap zone, trend line trap zone to mitigate what our valid order block. The same concept I just taught you guys, not quite just now, right? So you are seeing it on chart, right? So we also have this trend line, right? Then we tap into this levels here. Then this should be your long shot during London Open. So that should be it. This thing is lagging. So this should be a London trade, right? This should be a London trade. So you could go on a long year, target probably Asia highs or inside this order block where we actually close majority of our profits. I think Mena told you guys where it closes here, but because why we're expecting a reaction from that zone. So that was what happened today. So that's what happened today in this area. So this was a nice London trade. Uncle have capitalized on. Then just close mitigation of this order block. This is where you should close from because this is a valid order block zone where we can anticipate itself from. And now the market took out Asia high, so right, took out this trap zone, tap into the valid order block that we marked in the morning. Then we could break it down to the 5 minutes or the 1 minute for opportunities where we could enter from. Okay, so this is what happened. So let's say you miss this, right? Let's say you miss this buys. Let's say you miss this London trade, this buys, this sweet buy, and this could have been 1 to 7, quick 1 to 7, right? So let's say you miss this 1 to 7 buys, right? Fine. There's always opportunities because that's how Wednesdays are. Wednesdays are always is good for scalpers, you know. So now we break this zone into the 5 minute. This 15-minute order block, we break it to the 5 minutes, and this is the last up candle before the down move. So we refine that zone to these levels. So instead of using that big zone, we refine it into these levels. So now the market tap into that level. You could place a pending order there, right? Or you could just wait for a break of structure on the 1 minute. For confirmation entries. And what happened That's what happened there again. So the same concept I told you. So we tap into the zones, the 5 minute order block here, right? The market went up, took the swing high out, stop ons, did a break of this structure here. Then what happened? We formed an equal high trap zone, right? I told you there are three kind of scenario. We have this is the equal high trap zone, right? So you know the market never retraced to this order block, right? This was the order block you're anticipating, right? So now that we have an equal high trap zone, you just need to just wait for it because you know we're waiting for the market to retrace back to this order block to take a shot, but the market didn't retrace back. It came, broke structure, from an equal high trap zone, right? So you just have to just wait. Or if you take out the trap zone, then once you take out the trap zones, then you can take your shot there. All right. So, but this is what happens. Sometimes, yeah, the market might not really feel all the imbalance on the 1 minute. That's not what it does on the 1 minute. It doesn't really feel all the imbalance accurately on the 1 minute. But once you've seen that the market have taken out this trap zone, any form of bearishness, because you want to sell, any form of bearishness or any form of imbalance, right? Once you see an imbalance in between, you take your shot there. This was another shot for me, shot for us that one could have capitalized on, right? And the same thing, but like I said, so you see the market smoked up, took out the trap zone, formed this bearish candle, then this bearish candle, then look at this imbalance in between here. This imbalance in between, this imbalance here, right? This imbalance. This is where you could have shot from this imbalance there. So one could have shot there again because we have a trap zone there on the 1 minute. So you stop there, then the TP below this week, below that, because I told you a lot of people want to buy from this. Even the smart money guys want to buy from this. Supply and demand guys will look at this as a break of structure and they'll see this as a demand zone and they want to buy this. And you can see how the market gave them a reaction, right? That's how they did. Give them a reaction, then finally smoke them out. And this you can see this week and this week, this is like an equal lows. So once the market smoked them out, what happened? It's gonna go up back. So this is more like the case three trap zone, like I told you about. Case three trap zone, right? So you need to understand how this thing works. This case three trap zone. Then if you look closely again, you see um the market did another one again. So let's say you miss this one. Once the market smoke these guys out, for sure this is another re-entry. All right, so when you look at this, right, this is a huge trend line liquidity, right? So this more or less like the case two, which I just mentioned, the case two. Like when you see a stop on a break of this structure right here, right? Then form market then form like a trend line liquidity on the M1, smoke out this people buying here, supply and demand, um smart money guys buying this guy buying this right here, right? So this already formed a build up liquidity for us, buy side liquidity, right? In form of trend line. And this is more or less like the case two, which I just mentioned. So the case two here is this right here, right? So if you guys remember, uh, this is the case. So this is the case one, case two. So the case one is like this, case two trap zone is like this, form of trend line, then tap into the real order block, the valid order block, then you can melt. And this is the case three, right? So if you check it on chart, right? So if you look at it closely, you're seeing the same thing playing out, the same pattern, the same structure playing out, right? You're seeing the same structure playing out. and this was happening there, right? So you can say, so if you see the trend line being built up, case two trap zone. So this is the trap zone of case two. So you could take your shot here, right? So for sure you could take a shot in these zones here. So immediately take out the trap zone, you could take a shot, put your stop there, or immediately you see this hammer candle, any form of bearishness, like I said, in form of hammer candle. Once the candle closes, like in a hammer way, that's where you could take your shot from. But meanwhile, you also need to factor in timing. Timing is very, very key when trading the market. So this was during um, London break, right? So this was during the break, right? Launch hour time. So right, so this is not yet New York open. So what the market did was market was ranging. So we're not really expecting that much. You shouldn't expect big push during London break or so. So you always expect push during London Open, New York Open, right? So during the break hours, it's just like lunchtime. The market just keep on ranging or whatever. So don't really expect, but you could trade it, but don't really expect big push during this period, right? So during New York Open, the market came up back after taking out this trap zone there, came up back, then properly mitigate this order block. If you could look closely, properly mitigate this order block right here. The imbalance field was filled properly right here, right? There was still some fair value gap in this place. So on Milk New York Open opens, that was what happened. Mitigated it, then filled the imbalance right there, right? Then that's where we took another shot. So we took this shot during New York. Yeah, so you can see the tap during New York Open. That's 1 o'clock our time. 1 o'clock, 1 p.m. my time. That's New York Open. And so you could take another shot right here. So you could take your shot right here in making the mitigation of this, or you could wait for a candle closure. That's what we did. Candle closed there, then we took the shot. For sure, we are targeting these zones here. We're targeting this liquidity grab zone here. Alright. So once we target this, and there's a mitigation area right here below this liquidity right here. There's a liquidation area right here. So this is how the market works, right? The market moves from buy side to sell side, right? From sell side, taking out all this buy side liquidity in form of trend line. From buy side again, it move back, generate sell side liquidity. Like if you look at this closely, this is a beautiful trend line build up right here. One touch, two touch, three touch. A lot of guys are buying this shit. Then if you look closely, smart money guys will mark this order block, or demand guys, supply and demand guys will see this as a break of structure right here, and they'll see this as a beautiful demand zone where you could buy from. And if you look closely, you could see the reaction, right? They give you a reaction. So people will think, oh, this thing is going up, up, up. So they start adding more buying position, right? But look at what happened. We smoked them out. So trade, trading is also just all about an exchange. It's an exchange of money from the experienced trader to the non-experienced trader, right? So if 90% lose, 99% of trader lose money, then you don't trade the popular strategies that people trade. You just need to just do the opposite, right? That's why I said it's vital you guys should know. That's why you guys will watch the first video that I posted. It's vital you guys should understand the way these trend line traders, smart money traders, breakout traders, supply and demand traders trade. But we don't trade like that. We trade in the opposite direction. So um, this is what it is, right? So we took this one, right? So let's say you miss this one, right? Let's say you miss this other one. There's several opportunities in the market. So now the market mitigate these zones right here, right? Took out this um, sell side liquidity. So once the market take out this huge sell side liquidity, when definitely the market should draw to what, to buy side liquidity, right? And if you look closely, so we need to you need to wait, you need to wait for our criteria, right? And what we want to see, we want to see a proper break of structure after sell side liquidity has been taken out. A proper break of structure like this right here. I cannot just the market was just messing around right here. So this is what happened right here, right? So and there's another buying opportunity This is what happened. The market from equal lows here, right? Let me just make this clearer for you guys. So there was a form of equal lows right here, right? Like beautiful, beautiful equal lows right here. The market smoked that out, then did a proper break of structure after sell side liquidity was taken out. Then we know if the market take out sell side liquidity, the next liquidity draw it should be what buy side liquidity. So we know we have a lot of buy side liquidity right here, which I'll show you now. And the market broke this structure and we trace back to where the imbalance zone, the last imbalance or the holder block, the last down candle. This is where you could take your shot from. Another buy from. This is another buying opportunity if you miss that one, right? This is another buying opportunity if you miss that one, right? And if you just go on along here, target this is the nearest buy side liquidity right here. And if you look closely to your left hand side, you can see this equal highs right here, major buy side liquidity. Target there, then you're done. You're done. So I know after this liquidity has been purged, definitely where else in the market will definitely react from this imbalance zone. Let me show you. So the market will definitely react from here because this is major sell buy side liquidity. Then if you look closely, right, we have this imbalance field that needs to be properly filled above uh, this buy side liquidity. And this right here, like I said, like why we always sell right here is because sometimes you might want to wait for the market to retrace back to the imbalance before you take a short for a confirmation. But sometimes they don't just do that. They just break tap this POI right here and just form a bearish hammer candle or engulfing or whatever candle and just smoke down without giving the opportunity to re-enter right here. And that's what happened. If you look at this closely, right, um, the market just went down, went up, right, didn't mitigate this imbalance, but just went up, smoking down. And finally, the market came back there to mitigate this thing. So definitely, reaction should be there. All these are like inducement high, right? These are equal highs right here. This is also another high right here. All these are inducement high into this valid or POI, a valid order block. So for sure, reaction should happen right there. There should be a proper reaction, and we took that shot too. We took the shot right there, right? So we took that shot over there. So this was another nice entry one could have capitalized on. But mind you, you need to be careful, right? Because on the higher time frame, the analysis, right, that we projected was to take out buy side liquidity, like this buy side liquidity. So on the higher time frame, right, this was it on the higher time frame. So on the higher time frame, the projection was to take out this buy side liquidity, right, prior to today's start. So this on so we already took out this sell side liquidity. So we already know that yes, on the long run, we should take out this buy side liquidity. So all this short while here we're taking, we're just being careful about it. We're not really anticipating long push, all right? Not really anticipating this big push, right? So we're just being careful about it. So you just for scalping purposes, so you need to understand what's going on. And besides, there was news coming up. So doing news, you need to be very, very careful. And I advise you guys, if you don't know what you're doing, don't trade the news. Don't trade the news. Just wait until after the news has happened, then you can now start trading. So all right, so that was the anticipation, right? That was the anticipation, and so all those shots we were taking right here was just scalping purposes, right? So we closed immediately around these zones here. We closed immediately around these zones here, right? So the moment we close right here, and the market retraced back up. And if you look closely, there was also another entry opportunity, right? Let's say you miss this one, We also have another entry opportunity. If you look closely, we have this stop punch here, we have this break of structure right here, right? So what happened? The market came to mitigate this imbalance on this fair value gap levels here, right? Then you can smoke down, right? So we also have another one again. So we have the stop on break, and we are expecting price to come back into these levels right here, right? But the market, what did the market did? It went down, came back up, but we didn't really mitigate this, then drop back down to break this levels here again. Did another break of structure. So what do we have? We have a trap zone. Where's the trap zone? This one, case one trap zone on the 1 minute. So we know once the market takes out this trap zone, that's your short. Take your short here. Not necessarily it must mitigate this other block, but once you take out the trap zone, that's your shorting opportunity to short from, and your TP just below this, right? Mitigation of this other block right here. And once you mitigate that, then we smoked up. We smoked up. So that's what really happened. And so I want you guys to also back test and do a lot of back testing and do a lot of research. This could be a little bit overwhelming, but you guys need to just do a lot of back testing, understand all these things. So there were several opportunities one could have capitalized yesterday, just trading the lower time frame price action, right? So we have this one London trade 1 to 7. We have this one 1 to 5. We have this one 1 to 7 right here. We have this one 1 to 4. We have this one 1 to 8. We have this one again 1 to 6. We have this one 1 to 6, and finally all these ones here right here, right? So there's several opportunities if you know what you're looking for. And I'm not saying you should catch all these old moves. No, we have 1, 2, 3, 4, 5, 6, 7 plus this one. Let's say eight opportunities to trade, right? Eight valid opportunities. I want you to see it. You know that's your banger. So like we didn't take all these whole trades, right? But we took majority of them, right? So we didn't take all this whole trade. That's the thing, right? If you just see one, if you can just catch one or catch two or catch three out of these opportunities that's presented to you, fine, you're good to go. Not necessarily you must catch all the whole trade. I'm not saying you guys should trade up down like this, right? But understand this thing, understand the concept, understand how the market trap people, understand what is really going on and how to capitalize on your entries after the trap has happened. So the major key is understanding the trap zones. So once you understand your trap zones, then definitely you know where to look for proper POIs for your entries, right? And where to take profit from, right? So this is just the major key things like in this lesson that you guys should need to learn. And yeah, and with times we as time goes on, for sure you learn more other things, but these are the major key things you need to learn, right? On this happen on all the time frames, both higher time frame, the 1 minute like this, right? 15 minutes, 1 hour, the daily, 4 hour. It happens on all the time frames, right? So you guys don't should just do your back testing, do a lot of back testing. Go on chat, go to last week price action, go to last month price action. Look for all these things. They are there. They are there. They've always been there. All right. So until next time, guys. I wish you guys good luck and good trading. I'll see you soon. Thanks. Peace out.